Okay, traders, good morning. Welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boutros here with you this morning. Adam, Alan, Dan, Eileen, Graham, Jim, Kelly. Great to see you guys in the morning. So, we will be going over the update from yesterday. Still holding a small position on an Aussie short, actually. I'll be talking about that. Aussie Kiwi coming into resistance, as we noted yesterday. We'll talk about that. Sterling dollar, pretty lackluster. I still like the upside. If you guys saw yesterday's swing update from Jamie, some compelling cases to be made here for the sterling crosses. So sterling dollar, not really doing much as of yet, but I'm still looking alongside there. Sterling Kiwi, the preferred cable play. And then we'll take a look at Kiwi. We got that breakdown and the exhaustion that we were looking for. So I was on the Aussie, didn't participate in the Kiwi side, but a similar setup panned out there overnight. We'll take a quick review of the dollar index real quick. Crude is now above resistance, so we'll want to be mindful of that. And as always, guys, any questions or pairs that you would like to address, feel free to put them on the message board. I'm not really into dollar CAD, but if there's someone in the room who wants to take a look at it, we can take a look at it later in the session. Okay, as far as major event risk is concerned for the United States, today's session, we will be looking for the release of the FOMC minutes from the latest policy decision. These things are, it's really a crapshoot as far as whether you get some volatility on it or not. We pretty much know where the Fed stands as it stands, we pretty much know where the Fed is on policy. A quick look and update for the world interest rate probabilities. We typically check these out when it's prudent, when it's important, when we're coming into Fed data, when we're coming into Fed decisions. Adam, great to see you as well, my man. Good morning. But looking at this, you can see that the first material expectation for an interest rate hike from the Fed now shifts up to February. Okay, if you recall, this had gotten kicked out all the way to November earlier this month. So here we are with interest rate probability starting to sneak back up. February being the first probable or likelihood scenario where we'll see a Fed interest rate hike. You had a lot of people on the wires yesterday, a lot of Fed officials continuing to suggest that there's still room for an interest rate hike this year. I'm not sure. I think it was Lockhart who came out this morning and said there's room for an additional 2 hikes this year. Look, I don't know if these guys are just, playing with the market or if they're just talking down expectations that we'll continue to see them hold for the next year or so. But long story short, we're going to continue to have price action be our guide. And we'll have to see how the minutes turn out today and whether there was further discussion of an actual possibility or likelihood that we'll see them move on rates anytime soon. All right, so again, I'll reference this when it is prudent. We'll see if this shifts up at all into the December print. My personal humble expectation, this is just my guess, is that we will get a December print or a December hike, just so the Fed can essentially save face, right? It's the same exact scenario they locked themselves into last year, where they, swore by all means that, they were on the path to normalization and yada yada. The market didn't really perform as we expected. Come December, boom, they just slide one in to save face. Here we are, same scenario. Heading into the end of the year, you have Europe, which is doing additional easing, Japan, which is looking to do additional easing, negative rates, and it's putting the Fed in even a harder spot. But that's just my guess. Either way, back to price action. Here's what the dollar index looks like heading into the U.S. session. Or here's what the dollar, rather, looks like heading to the U.S. session. Stronger against all its major counterparts today, although you can't really see that reflected too strongly in the index. Remember, the Dow Jones FXCM dollar index only carries the Euro, Aussie, Sterling, and Yen. So you can see that Kiwi actually with a decent loss here of 0.74%, not reflected in the index. Even the CAD with that 0.15% not reflected in the index. So the dollar is actually doing a pretty decent job today. The ICE index also shows a little bit of a lesser impact rally just because the ICE index on the future side is so heavily weighted the euro, which only saw a loss of 0.07%. So just some relative, to put things in perspective here as we open up the U.S. session. As far as data is concerned, like I said, there's not really much on tap today. Do look for the crude inventories that's released at 10:30 shortly after the conclusion of this webinar. And then obviously the Fed minutes at 2 o'clock is going to be the major market mover for the day. Don't forget, 1 o'clock p.m. today, we do have the midweek strategy webinar with Jamie Setley to go over some of the swing trades and longer-term perspectives on these setups. Okay, let's jump right into price action, shall we? Here's what the dollar index looks like so far. It's ugly. I don't like it, just for the record. The only thing I'm going to prompt on this is continuing to favor a near-term short bias below the monthly open. Look, yesterday we technically did close below this formation, but momentum continues to hold 40 on a daily close, and that's the second rebound of magnitude that we've seen right off that level. So don't be surprised if you see this drift a little bit higher. Just as a disclaimer, I am still holding Aussie shorts, so I do think that you could see some further near-term dollar strength. Longer story, we're still looking to remain bearish on the index. Even from a near-term prospect, here's what the 30-minute looks like. It's pretty ugly. But just for reference, there's that longer-term trend line that looks like we're trying to break below. And just a basic channel off of last week's high actually ends up pretty decent. Extended off support, catching those lows yesterday. Okay, here's the yearly open. Here's the weekly open. Stay bearish below the yearly, I'm sorry, this is the monthly open, and this is the weekly open. If we breach above this, I'm neutral. The only thing that would make me bullish would be a breach above 11,950. Okay, and for me, the confluence break of not only the weekly open, but also basic channel resistance would be a nice indicator for a near-term breakout here in the dollar. Not our favorite scenario, right? I'm actually looking for this rally to find some exhaustion in this region, and we'll look to play that next downside target into 11,850, 11,853. And bearish invalidation up here at the weekly open. Any questions on the Dow Jones FXCM dollar index? All right, let's jump into the juicy stuff. Eileen says, can you talk more about your thoughts as you stalked and took that short on Aussie dollar last night, where you entered? Yeah, sure, Eileen. Let's do that right now. Here's where the Aussie stands. Here's where we stood last night. Excuse me. First, let's start off with the daily chart. So, cheers, Eileen. So, the level of which we turned at, and I know, guys, we talked about this here in the webinar. I know swing trades were long. We took a break-even stop on the swing side at 76.55. No harm, no foul. But from a near-term prospect, the concept of exhaustion up here was, for me, the move, right? Technically, we were still in the uptrend, and technically, we were still in the channel. So I'll show you the thought process behind this short, Eileen, in just a moment. But I just wanted to let you know, on the grander scheme of things, we came into a big, big region, right? Forget the 88.6. That doesn't hold that much merit, except for the fact that we already rebounded off that. The high day close for the year, a level that we always look at here in the webinars, also gave us a range of 77.35 to 77.56. That's exactly where we capped out last week. Yesterday, that's exactly where the exhaustion high also lost its steam. And the sliding parallel for this current operative slope literally has continued to be our guide. On the near, so before I get into the 30-minute chart, right off the bat, you're at a big level of resistance. And like I said in last night's update, ultimately I still like the Aussie higher, but near term, you're coming up against a brick ceiling, right? It's not going to just plow through after 3 failed attempts outside of some sort of fundamental or economic catalyst, which we didn't get. So from the 30-minute chart, also one last thing to take note of is the momentum trigger. The trigger that gave us a nice short bias last month on that outside day reversal that we made on the 15th. If you guys remember that, we got a trigger to the downside shortly after, and momentum has offered resistance all the way up. Okay, here's what the 30-minute looks like. Excuse me. And here's what we looked like last night. So the premise of this trade was, again, this near-term slope that I added, and I even noted in yesterday's piece, we have no way of validating whether that was in play or not yet. Why? because the only reference point that we have was this low. Now, when I find something like this, I'll still leave it on there. I won't necessarily operate off it, but certainly it's something I'll be in focus. It actually ended up being pretty fruitful because once you got that confluence break at 76.53, you got a little bit more of a dramatic free fall to the downside. So we're now testing the 100% extension. We've dribbled below that. We're sort of straddling that, so I'm not going to really use that as a concrete level anymore. Now looking for subsequent targets at the monthly open, 75.90, and then confluence support at the July high day close coming just lower at 75.75. Okay, near-term resistance right back at 76.53, same area of which we were looking for support. Now, as far as the entry is concerned, on the Aussie, DJ's asking, on the Aussie daily chart, is it at resistance on downtrend from March 2013? I think you mean April 2013, and I'm not sure what trend line you're looking at. If you're looking at this one, okay, which does hold merit, 100%. Let me just adjust that really quick. That does highlight further that resistance level. So DJ, I would definitely be working with that as well. And here's the one thing I want to know, guys. A lot of times I get emails from some of you saying, hey, Mike, I have this trend line or this pitchfork. For me, I love it. Why? Because it doesn't matter what you're looking at as long as we're highlighting the same level. You know what I mean? Technical resistance is technical resistance, whether it's a trend line resistance, whether it's a Fibonacci confluence, whether it's a sliding parallel, but it gives me further conviction. So DJ, thanks for pointing that out. Yeah, it was the April high, but you're absolutely right. We're right there and broadly holding that slope, further highlighting key resistance at 77.35/56. Nice find. I like that. I'll leave that on there. In fact, let's just go ahead and label it so we don't have to keep scrolling back and look where that's from. It's from the April 2013 high. Boom. Nice. But back to the 30-minute chart. So before we jump into the 5, Eileen, just wanted to note, yeah, I did take the trade on the premise of the fact that we were still within this uptrend, right? And in fact, a move into structural support, this would have been a region I would have been looking for long exposure. Point being, here's what the 5-minute looks like for Aussie dollar. Okay, let's look here. So for last night's entry, here it is. You had a trigger that didn't give out till after I got in, but Eileen, a couple of different things. First of all, momentum turning ahead of 60 on every subsequent rebound. And from a risk to reward, this entry literally had like 11 pip stop. Why? Because we're now 2 hours into Sydney trade, or a good, about 2 hours into Sydney trade. Stop is against the Sydney opening range high. We got that Kiwi data, which caused a spike in it, which quickly retraced. So for me, an entry here with momentum holding 40 with an 11 pip stop was worth it. It was risk to reward was definitely worth it. My initial targets was just right here at the trend line support or the median line support. So I shaved off a little bit as we started to move off and I kind of went to bed. I missed taking profit initially right there, but inevitably it did break down. We booked a little this morning as we were hitting that 100% extension that compiled to 74 pips, 70 pips here. And I'm still holding a little bit with my stop up against this 76.50 region. My stop is just above that at 76.60 at this point. So I'm already guaranteed or locked in on 40 pips on the remaining, 1/5 of the position. And even on the levels of where you took profit on this, Eileen, there was reason to do that as well. Here's what I looked at. The first thing I did when I woke up this morning, this thing was heading into new lows. Momentum was making divergence. 2-point trigger touch. As soon as we broke to the upside, all right, maybe it's time to bail on some of it. Now we break 40 to the upside, hold it as support. All right, maybe it's time to shave off some more. Okay, now we did break into overbought condition. I'm never going to bail on the short all the way at the highs, you know, on a rally like this. So I'm still holding some. There's the support trigger I'm looking for. I wouldn't take a new short on that, but if it breaks further, Eileen, it's just more indication to hold that position. Maybe we'll bring our stops down to this high if we do break the low. But the initial position was just taken on the fact that you had a really good risk-reward ratio. And momentum showing some really tired signature here, essentially coming from overbought, going into the 30 level, holding 60, holding 60, holding 60. Risk reward of 10 pips. Kind of can't say no to that. Does that make sense? Any questions on anything kind of there to walk through? It's a good drill to do every now and then. Aha, see it. Lots of thanks. Cool. Right on, Eileen. So we'll play around with this one a little bit. Like I said, there's only about 1/5 of the position left on, so I'm not really worried about it if it does rally through 76.50. But near term, that's sort of the level of resistance you would want to see hold. Also an area of interest for possible fresh short exposure if we do get the snap higher. Keep in mind the weekly open is right there at 76.51. That swing low is 76.53. Ultimately, on a downside break, if we do get it, an area of interest for possible long entry, 75.90, monthly open, July high day close, 75.75. So this region here. I guess I should probably change the color of it now. Turns into an active target. Eileen says really makes sense. Right on. Right on. Any questions on Aussie? We're not out of the woods yet. We do get Aussie data later tonight. We're going to get those Aussie employment numbers. Here's what those look like. We are expecting a pretty decent print, 10,000 on the mark here for a gain for July. We're looking for unemployment to broadly hold at 5.8%, with the participation rate also seen holding at 64.9%. So that comes out at 21:30 here in New York tonight. And again, this is going to be the major or the last major event for the Aussie specifically. Keep in mind, as we head into Friday, guys, we do get, actually that's on CAD. So yeah, this is going to be pretty much the last major event risk for the week. All right. No other questions on Aussie. We'll go ahead and move on. My notes say Aussie back at support, so watch for a rebound here. Larger near-term bearish invalidation, 76.54. Moving right along, pound Kiwi from last night looked like this. Not a pair that I would recommend if you're newer to near-term trading or if it's a newer strategy for you, just because it is a wider range ATR, which means it's the probability for gains or the size of your gains are larger, but also the size of your losses on the trade as well. So just keep that in mind if you're just getting started here. Sterling Key, though, last night was a beautiful play right into the major resistance that we're looking at, and we're testing that right now, basically at the 180 handle. Here's what we looked like last night. So I guess we should start off on the daily chart. Here's what the daily chart looks like, and basically the only thing I wanted to highlight here, sorry about that, guys, is the fact that we're coming off that 177.07, 177.03 level. Really critical region. Why? 2013 stretch low, but it also is defined by this year's low day close. Okay? So if there's any technical significance to this, and this low last month wasn't just a rebound off the 2013 low, you'd want to see how the market reacts. Well, the last two times was right here on the 11th, really strong reaction, and then we didn't even make the approach yesterday before turning higher. So key support, multi-year support on a momentum signature. It's not divergence, but certainly starting to be a little bit more supportive, pending resistance trigger on tap. So for me, yeah, I do think it turns higher. I like the concept of strength in the pound, which we talked about on the swing update and the intraday update last night. And I also like the idea of Kiwi weakness, which we'll go over in a moment. Panned out beautifully last night. I didn't get a play on the Kiwi, but fading the move was the right thing to do. Long story short, what we're looking at right here is the possibility for a nice turn higher in pound Kiwi. I am looking for initial major daily resistance up at the monthly open. That basically takes you right here. The exact monthly open comes in at 183.35. That level coincides very nicely with basic trendline support off last month's high and trendline support off the high that we made in May. Both of those converge right here. So you can see a scenario where this recovery at least gets to here before you start to make any major assumptions on whether this is a breakout, reversal, correction, whatever. That's sort of the first area of resistance you'd start to look for on a move higher. Here's what it looks like on the intraday chart. So for the immediate turn, this was the formation that we were focused on. We've been holding within the confines of this pitchfork off of the highs that we made last month. Very, very clean for the last 2.5 weeks. This constitutes a lowered floor. So those of you who are not familiar with that, when you're in an uptrend and the market turns right ahead of the upper median line parallel, that's called a raised ceiling. When you're in a downtrend and the market turns right ahead of the lower median lines, this is called a lowered floor and typically is signs of exhaustion. So we highlighted all these things yesterday, noting that this came right into the 50 line right here and was holding as resistance. Bearish or bullish invalidation is down here. A break higher targets the weekly open, 79.56, and this key resistance confluence at 180. Both of those got taken out. At this point, we're trading right here. So to validate the breakout and a reversal targeting the monthly open, like we talked about, those trend lines on the daily chart, this is the level we need to breach. Again, I didn't get any positions on the entry here for the long side, although there was an entry in early European trade. But if you are holding longs, this is where I'd start to take some off the table, bring my stop up to break even or at least below the lows that we made here in Europe, trying to see if we can get that upside stretch, targeting 80.85 and secondary targets here at 82.12. Very basic setup, guys. Just a basic retracement, this pitchfork, and basic trendline resistance off the highs. That's all you really need for this setup here. Again, this pitch off the lows, we don't have clear-cut confirmation, or we didn't last night have clear-cut confirmation that we were working with a proper slope. But now I'm starting to get a little bit more confidence in it. You saw that hold as resistance last night. We finally broke through. Now it's holding as near-term support. That further highlights that 38.2 retracement at 82.18, 82.12 rather, excuse me. And at this point, I would be pretty comfortable bringing up my bullish invalidation level, actually. I'm just looking at this chart here, guys. Probably to these lows here. Nice pivot. Take it out to that lower parallel. That basically raises it from like 77.70 to the 78 handle. All right, so as long as we stay above this region, look for that move towards 82.18. Keep in mind for the pair here, we do still have some event risk on tap. We got the claimant count here earlier today, coming out better than expected on the most part. Claimant count held at 2.2%. As far as the ILO, held at 4.9% for a gain of 172,000 versus the expected 153. The jobless claims fell by 8,000, which is a good thing. These are the actual unemployment claims coming through. So a pretty decent print around the board. Should stay out of the way for the sterling advance. The only thing I wanted to highlight is heading into tomorrow, you do get those retail sales figures, which are expected to show a nice improvement from last month's previous dismal read of a negative 0.9%. Supposed to see a nice pop up there to 0.3. If you exclude or include rather auto and fuel, we're supposed to see a rebound back into positive territory for the month of July. Any questions on the British pound? Sterling key specifically. We'll go over the British pound in just a moment. Still like it higher. Again, a pop here. Look for 80, 85, and that 82.12 level. Okay. We're running good on time. Here we go. We did Aussie, we did sterling key at resistance, sterling dollar, unchanged. Okay, so the British pound is not going to take us too long. There's really not much to discuss here as far as anything new materializing. You know, there's not, I guess I'll just show you, just jump through the charts real quick. Here's what we look like on the daily. Obviously, we've looked at this a million times, and I kind of just wanted to highlight again the basic slope that we're working with, and the premise of which, again, here in momentum, showing some divergence with a new set of lows, price action holding a higher low. Looking for this trigger here to see if we can give a topside break today with a move surpassing 131 would be, for me, the breakout zone for the sterling. So remember, there was a thrust on this yesterday on Jamie's report. There's a lot of exhaustion indicators that are suggesting we're getting a little tired here on the sterling short. I would like to see this thing start to move a little bit higher. On the event of this dollar turnover, this is one of my favorite plays. And sterling key specifically is where I would like to put my money on for the sterling strength story. But for the British pound, here's what it looks like on the near term. This is, I guess, the only thing we kind of need to focus on right now. There's 131, okay? Upper median line parallel for the current operative formation off the highs that we made back on July 15th. Remember this zone we highlighted last week for the entire week. We sat on it, sat on it, sat on it, got the break late in the week on Friday. We opened up this week with this level being resistance. Well, now it's support. Here's where we were trading yesterday, guys, if you remember in the webinar. And we actually said when you were asking where's a good entry, an entry would be somewhere in this range. If we get a pullback for a long or a rebound off the weekly open, it was real sudden. So I don't blame anyone who didn't get it. I certainly didn't get it. And the break, first target, got hit right off the bat at 130.56. So still like the upside, momentum holding 40 here, looking for a move back towards 131. And this would be the material breakout, which in my mind would give us a lot larger of a rally, targeting 31.70, and then key resistance at 32.46, 32.24. This is the monthly open and the key 618 retracement. Wouldn't be looking to target anything beyond this on the initial stretch if we do break higher, just for the record. Not just yet. Okay, should be a pretty big region near term if we break out here in the sterling. Again, might be a decent play for tomorrow's retail sales print. You know, from a trading standpoint, I would be looking for either a pullback into this region again to offer some long throws, or if we don't get that pullback, guys, and it just rallies through, I'm going to sit on my hands. I'd need to wait for a breakout, a pullback, and then again try to get it on the long on the pullback and test a former resistance support. But from right here, you're right slap in the middle of the London range, wouldn't necessarily be messing with this just yet. Still like it higher. In fact, I think swing trades, if I'm not mistaken, Jamie put out a position on this long at 129.65. So just above here, nice. The swing trades are also be looking for an entry there for the long. Any questions on the British pound? One other thing I just want to bring up is you might have seen me highlight this yesterday on Daily FX. But if I can shrink this for a little bit, there we go. You can see that SSI is reaching into fresh extremes, 2.76, meaning almost 3 traders are long for everyone that is short. Now, when you're using SSI, ideally you'd be saying to yourself, well, Mike, isn't that a contrarian indicator? Shouldn't we be looking short if all retail sentiment is getting really bullish? On an average, I would say yeah, but it's important to note that when these extremes in sentiment get hit, a lot of times those will mark major turns in price. So for example, back here earlier in the year, you saw sentiment reach an extreme of negative 1.3. That was the high. So in actuality, it called the high and it moved lower from that region. The only reason I say that right now is because the last time we had sentiment this high was right here, just ahead of the post-Brexit low. And then here we are again, 2.76, while price is at an extreme. Okay, so when the sentiment hits an extreme, as price hits an extreme, you don't want to necessarily fade it and use it as a contrarian indicator in those instances. Does that make sense, guys? That's all to say further validation or further evidence that we could see sterling, in fact, move higher. I would stay nimble on it if you're looking to take fresh exposure until we get that breakout above 31, but indications, at least from the near term, is that we are making a little bit of a turn here. Makes sense on the SSI. Was confused on that, but get it now. Right on. Yeah, I mean, typically we want to, we don't want to be on the same side as retail sentiment, but when these extremes in sentiment are registered as price is making a new extreme, that's when it's that's when you want to not take the contrarian view. Okay, so that is British pound. A little lackluster overnight, but we'll see if we can't get some play on that heading into the close of the week. Last up from last night was Kiwi dollar. We were looking for exhaustion, and we got it. Here's what Kiwi dollar looked like last night. The only reason, and I'm speaking just completely frank here with you guys, the only reason I didn't take this trade last night was because I was already short Aussie dollar, and I didn't want to put all my eggs in one basket. Being short Aussie dollar, short Kiwi dollar is a pretty aggressive long dollar position. For me, not necessarily the way I like to trade. Graham saying, and sterling dollar daily engulfing bar traditionally retail traders long signal? Yeah, I would say that, except that it's not necessarily a full outside, the body does cover it, but it's not a full outside day reversal. It's more than engulfing bars. The reversal bars for me, the outside day reversals are more evidence, Graham. So for example, if yesterday's low had peaked below the low that we made there on the 15th, that would have been a stronger long signal in my personal opinion. But yeah, price action alone, I think, is pretty constructive here off the low. You wouldn't want to get too aggressive at the weekly high per se. I don't, put this past this thing to jump back into 29.50 before we rally. But broadly speaking, yeah, I agree with you on that one. So to go back to Kiwi dollar real quick, like I said, that was the only reason I didn't want to double up on a dollar long exposure. Obviously, hindsight's 20/20. The major premise of the trade, again, we talked about this yesterday at length, how I didn't necessarily like it because as long as we held below 75.95, 75.93, the March 2015 low day close, the high day close from last month, as long as we couldn't close above that, I still think the risk is for a pullback. Add to that, that momentum just can't get any fruitful moves above 60. So you have a lot of things that are still, judgment hasn't passed yet here on the Kiwi on whether we make a much sterner reversal pullback or whether we start to move higher. All I know is that 72.95 is a big region on a closed basis specifically. Yeah, we probed through it 6 times over the last 2 months, but we haven't closed above it save once, and that was the high day close, which continues to govern that high. Basic trendline support now highlights the monthly opening alongside that pivot here at 7,200. Clean that up. That would be the confluence support down there. Key resistance on a topside breach, still 74, 73.90. Here's what it looks like on the near term. And here is what we look like last night. Okay, so one thing I noted here as well is it was a little premature. We put this together during the webinar, if you guys remember. It was a little premature for me to use this pitchfork here, but I think it's turning out to be quite fruitful. If you take some sliding parallels of that same slope, you can see resistance, 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 support, support, support. Another sliding parallel extended to this high. You can see resistance, resistance, breakthrough, support, support. So long story short is it further highlighted key resistance yesterday right above that range that we've been looking at for the last 2 months. And here's the breakdown to the downside. You actually had a decent trigger here in momentum. And long story short, we're at support. This basic pivot, near-term resistance right back at 72.65. Bearish invalidation, lowered from that 73.25 level. We'll lower that down to 73, 72.95, same region. Okay. I don't want to get overly aggressive on my stance here with telling you guys that I'm super bearish just yet, because we haven't necessarily broken the weekly open, but all indications, again, from the price action that we're seeing to the highs here, leaves the risk for further downside while sub 73. Major key support on a downside break of the weekly open, you're looking for 71.48, 71.50. What high did you start that fork on Kiwi dollar? This is the high that you made on August 8th. The subsequent low from August 7th, and the subsequent high from last week on August 10th. Here's what it looks like on a 2-hour. And this 71.47 level is just 100% extension right off the highs. Okay, great. Got the pick. You got it. Right on. Pretty clean. Pretty clean. Kicking myself for not taking that position, but again, not a good idea to necessarily load up all your eggs in one basket, because if the dollar had reversed on us, I would have been down, you know, on both of those positions. Typically, if I'm going to take a position on the dollar, it would literally be a smaller position if it's in the same direction, or actually you can take near-term hedges against a longer-term position that you're holding. But largely speaking, I tend not to want to double up on exposure on any one side. Okay, so those are the 4 updates from yesterday's report. I want to leave some time here. If you guys have any questions or specific updates or pairs that you're following, do feel free to throw them on the message board. A quick look at some of the charts from the radar charts haven't changed, guys. As far as the gold levels are concerned, still chopping in the same range that we've been highlighting for the last 3 weeks on that radar chart. Risk for further downside sub 1355, near-term support 1330. And a break below 1324 really needed to shift the focus back towards the downside. As it stands, your focus is on this range, period. Period. The broader story, longer term, is bullish, any way you slice it. The question is, have we completed the correction off the high from the long-term multi-year trendline resistance? If the correction still has further to go, this is the level of which I'd start to, really favor some long exposure. That being said, the immediate focus still remains on this 1330, 1355 range. As far as crude is concerned, look, that made it through resistance yesterday. I don't know what to do here per se. Again, which is one of the reasons I don't really fancy dollar CAD at this moment. Here's one trend line resistance. It looks like we closed above it or at it yesterday. Still not really well defined. The other trend line resistance we were looking at here in the webinars was this one. That shows a clear break earlier in the week. So look, for me, I'm just kind of going to have to sit this one out. We're just going to have to let the dust settle here on crude and see where this thing finds some ultimate resistance. Just want to show you that we also broke above the 50% retracement, and the 618 is just higher. There we go. 618 is just higher at 46.88. So ruling is not out on crude either. Let me just check this out real quick. Just some things to take into consideration there. Steven, great to see you, sir. Sterling yen dipped to almost 129 and has recovered. What is the outlook with the levels you have been looking at? Let's take a look. Pound yen, we actually did take a look at it yesterday in the webinar, if you guys remember. Here's the deal. I just don't have the guts to play with it. I love the long side. I've been talking to you guys about this for a couple of weeks. Actually, I've been telling you, but it's just the timing on time, or the difficulty in timing these turns is very difficult, for lack of better words. You got a raised floor here, just like you did on sterling key. Okay, let me clean this up for you. Bear with me 1 sec, all right, Steve? Okay, so Steve, what it looks to me is that we're struggling. We're trying to basically break the objective weekly opening range high. And if we do finagle to hold above that 31 handle heading into the U.S. Open, I like a stretch into 32.40. This is the breakout zone, though. For us to get a full-on conviction reversal, in my humble opinion, we would need to clear that out. Also, one other thing I want to highlight here is you see this 50 line, which is currently guiding or limiting the advance near term. The 50 line here for this current operative slope on the near term. Well, if you look on the daily chart, it's almost an exact mimic, at least in slope, of this long-standing channel. Basic channel resistance, basic channel support has been a pretty definitive pivot in price action near term. Add to that basic slope resistance, channel resistance, whatever you want to call it. So my point being is you're coming in some near-term resistance on both the daily and the near-term charts. And we need to clear 132.40 to get this thing going. Now, as I always say to you guys, having the proper directional bias is just half the game, right? It's having a proper setup. And for me, Steve, even from a scalping standpoint on an intraday, I mean, I guess if we do get a decent long trigger, you could try to put it against the lows that you made here for Europe, but basically it's going to be a tight trade, and it is a wider ATR trade. Sterling yen has a massive ATR. So just keep that in mind, but largely speaking, I do like the long side. I do like the long side. The only problem is you're dealing with the yen. Who knows what the hell that thing's doing. Maybe look for sort of a move like this, Steve. Possibly a pullback. And then a rip higher. Interim support right here. This is the weekly open. It's also that longer standing trend line. Okay, so I would look for immediate support at 130.70. Anyway, slice it. Bullish invalidation, or what would shift the focus back to the downside, would be a move back to sub 130, 129.97 here. Breakout zone. Steven, does that help? Does that make sense? He says, great, thank you. Yeah, more than welcome. Interesting pair. Interesting pair. You just want to be very cautious trying to call a turn. It's a fool's errand to try to call these turns on major market reversals. But from a scalping perspective, certainly there is opportunity. Okay, I will touch base real quick just on dollar CAD. I had it here on the side note if we had time. Look, it's our resistance. It's reacting to initial resistance. Initial resistance is very simply former support. Here's the daily chart. We've been working with this formation for months and months and months. This is going on 3 months now. That's the break of the lower median line parallel. Here's what it looks like on the 30-minute. You broke it, made a pretty steep run yesterday. Whoops. And look where the rebound is finding resistance. Okay, right back at former support. So it ain't out of the woods yet. I would need to see a pop through here to shift the focus back to the upside. Obviously, that would be much better accompanied if we start to see crude start turnover as well. Excuse me, but until we do get a little bit more clarity on this, guys, just not interested. Just not interested. Even from a near-term standpoint, if you guys look at the 30-minute, and this is what we've been following for the last couple of weeks, remember, a downside break of a descending slope, those can be the sharpest parts of the move. Okay, a topside break of an ascending slope can be the sharpest rallies of the move. So this right here has bigger implications for me, and as long as you stay below former lower median line parallel of downtrend support and the former lower median line parallel of uptrend support, you know, I think you're at risk for further losses. So I don't necessarily have a play, but we'll continue to note the highs that we made here in Asia as our near-term bearish invalidation for dollar CAD. Any questions on the loonie? All right, so guys, if there are no other questions, I'm going to go ahead and wrap it up there. Still holding that Aussie. We'll see how that pans out. Pete wants to look at Euro. Did we not check out Euro, Pete? Oh, man, where's my head today? Oh, this is why, because I'm not doing anything with it. So the Euro, Pete, look, it looks pretty darn good to me. We were following this one from the start of the week. We talked about it in the webinar yesterday. You haven't really done much. You stretched into a major resistance, you kind of pull back, and you're sitting here wishy-washy. I still want to get long. I want to look for a pullback towards structural support. Ideally, again, in an ideal world, ideal scenario, you'd come back into 112.30 to find some support at that former pivot line, and you get an entry there, and you look much, much higher. I do think this is a pretty decent trade, guys. Here's what the daily looks like. The only thing we're contending with is former slope support dating back to last year's December low as resistance. The current operative median line off the low as resistance. Yesterday's turning point of where we bailed off of was a big region. So I'm not surprised, like I said, if we get a pullback into 1230 again before we start to look higher, targeting 1318, 1396 would also be the next subsequent target. But you stay constructive above the monthly open on this one, in my humble opinion there, Pete. The monthly open is at 111.70. As long as you stay above 111.70, you look higher, broadly speaking. Make sense, Pete? He says, great, thanks. Hey, you're more than welcome, man. Here, you can take a snapshot of this if you need it. Here's a 2-hour, just to kind of give you some reference on where we are. But the chart hasn't changed, Pete, from... I think near term, you're still at risk. The immediate risk is still to the downside here, but you do want to buy that dip. And if I'm not mistaken, go to the intraday chart page. I switched this up, guys, to put the radar charts at the bottom. This is only going to get updated once, twice a week, depending on what we're looking at. So this is going to be the more prudent information for you. But euro dollar is the same levels that we highlighted here on the 15th. Okay, no change. DJ, I was late. Can you give me an update on Aussie? Horace, I'm still holding an Aussie short. We broke support, so I'd be looking lower. I don't want to go over it again in too much depth. There's the photo if you need to take a snapshot for your reference. I'll have this archived for you as soon as I can, Horace. DJ wants to look at dollar ZAR. Honestly, I don't follow it very closely, but what are your thoughts here, DJ? He's saying thoughts on dollar ZAR, please. It looks like it's holding that very long time support dating back to 2011. Sure. Let me do some on-the-fly analysis here for you, DJ. Stick with me 1 second, okay? Okay. Don't need that either right now. Let's bring it back into a daily chart. Okay. Okay, so I would put us at near-term support. Yeah, I think I would agree with you on that one. Why is the rand called the czar? Good question. I don't know, Pete, but or DJ. This is what I would be saying as far as dollar czar is concerned. I'm a bear of the dollar. I think that the dollar is coming to some support and you could see some rebound, but I'm a bear of the dollar. So broadly speaking, EM, I would still need to say that broadly, I'm bearish this pair. That said, a couple things to take a look at, Deej. First of all, you're absolutely right with that trendline support. I don't actually have us touching the basic trend line. I'm not sure if you're using different reference points than I am. We're just shy of it, so I wouldn't put it past this to be one more washout, to wash out all those weak hands before we start to rally. So just keep that in mind. You know, this is just the way these EM currencies work. They're not really very widely as traded, so you can see a lot more intraday volatility, which is one of the main reasons I don't focus on these you know, on an intraday basis per se, DJ. I play these more so longer term, kind of set it and forget it for a couple of weeks or months. But he says, I also not quite at support yet. Yeah, so I think you can slip down a little bit lower, sort of a last washout here before you make a rebound. Ultimately, you would look to sell that rebound. Obviously, it's going to be determined on where we are in time. The monthly open comes here at 1385. Let's just call it 1386. And if we do find a low, the first thing I would be looking at would be a basic quick retracement of this year's range. So again, it's too early to do this here, DJ, because you don't know that this is a low. But you put a basic 236 up here. So you could see a scenario where This thing shows us a pretty mean rebound before it starts to move lower. Ultimately, I still do like a downside break of that trend line. Topside momentum trigger here. Keep an eye on that as well. Give you a little alleviation to the pressure if you do see that topside pop. DJ, does that help? Again, if it's something you're really interested in, I could do some more analysis on this. I can give it a little bit more flavor on the near-term charts, but just keep in mind the spreads tend to be much bigger if you're intraday trading. And like I said, the volatility on such a thin market can oftentimes be very difficult to trade on a near-term basis. All right. Thanks, Mike. Yes, I don't have much. He says I have it very much the same, right on. Thinking of the 100% expansion target if that trend line breaks. Yes, my friend. Yes, if that trend line breaks, and specifically if it breaks, DJ, in time, like around here, heading into the 19th, the 20th of the month, those confluence breaks, yeah, I mean, you would have a pretty clear-cut target, I think, down at 1230. 1233, let's call it, as a conservative approach. Sure. Do you have time to look at Euro Aussie, Mark Lavender? For you, I do. Mark, here's what Euro Aussie looks like, man. Look, it actually broke and made a pretty big reversal. I haven't been looking at it just because I missed the initial rally, and it's been ripping ever since. So for me, kind of, you know, I don't necessarily, whoops. I don't necessarily want to chase. You haven't really gotten much back and forth since that massive breakout play. And if you guys remember, we were looking at this last month at this slope, and we said, look, we broke out, possibility for us to find support here, former slope resistance. And I was actually looking for a hold here. Once it continued to sink below 45, I just lost interest. You know, I thought this thing was just going to go straight to hell. Look at this trend line. This is last year's December low. Such perfect pivots. So once we start to sink below, it kind of fell off the menu. That big old massive reversal we made on the 12th really changes things, at least for me near term. So let's clean this up a little bit. This kind of begs a pitchfork right here. I don't know if it's going to be fruitful, but let's see what it looks like. Too early to tell. Too early to tell, but I would be looking for a near-term resistance right around that 148 handle, basically where we are now. That's the low that we made for June, but it's also the high close that we made from that last bounce there last month, and a pretty decent pivot in price. Let's see what this looks like. Some building divergence into that low. This was a beautiful longer-term turn. We were just really early last month trying to call the turn from here. You actually got a beautiful rebound into the yearly open, but on the pullback here, a little early trying to call support again along that same trend line. But even the second divergence signal really reaffirmed, in my opinion, the rebound here. Yeah, look for resistance pretty close to where we are right now. The yearly open is going to be the real test, 49.13. Topside break of an ascending formation can be the sharpest part of the rally. Another example of that happening right here. Boom. Yeah, I would put us at near-term resistance. The immediate risk stays for the pullback here. For a pullback lower, I would look for support around the monthly open, which is right here. Bullish invalidation along the swing lows that you made in US trade yesterday. and that would be down here. Top side break, you're looking for the yearly open. It's actually pretty clean. It's actually pretty clean. DJ, does that help? On Euro Aussie. All right, guys. He says, thanks, cheers. You're more than welcome. I got to run. That's the bell in the background if you hear it for the U.S. Open as we get things underway. Don't forget, 1 o'clock, Jamie Setley's on board with his midweek strategy webinar. And again, at 2 o'clock is the release of the FOMC minutes. If you're holding dollar exposure, might be not a bad idea if you're in the money to shave a little bit off. Expect some volatility, but really, the devil's in the details. I'll keep you updated on SB Squawk if we really get anything of note from the minutes this afternoon. Best of luck trading. See you guys all tomorrow morning. Cheers.